Good morning, everyone. It is Wednesday, June 25th, 2014. It's 8:18 a.m. Chicago time. Apologize for the delays. Still getting accustomed to the new office and new situation here. Trading futures options on futures and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. The market's tumbling, led by I'm hearing alerts on the European markets leading this charge down. Let's take a quick look at the overnight news that came out and may drive our session. German consumer confidence beats 8.9 versus 8.6. NATO's Rasmussen says he sees no signs that the Russians are respecting their commitments to withdraw. The Russian parliament revokes the right of military intervention in Ukraine, which was done on Putin's request. Yesterday, a Ukrainian helicopter was downed by rebels near Slavyansk, killing 9 people. Syrian airstrikes killed 50-plus people in western Iraqi Anbar province. Second consecutive day of airstrikes. Note that it's a second consecutive day. The sell-off yesterday was attributed to this. The sell-off coincided with the news that there are airstrikes into Iraq from Syria, and they are hitting Sunni areas as part of this ISIS rebel movement. The Wall Street Journal reports that European banks, including Deutsche Bank, Unicredit, and Crédit Agricole, are concerned they may now be hit with bigger than expected penalties in the U.S. After the BNP fine. There was a huge fine against BNP for helping those who owe U.S. taxes to avoid taxes, and they feel like this is going to extend to others. Credit Suisse and others have been a part of this big investigation by the U.S. to out anybody who owes money for taxes to pay up. Goldman Sachs, before the number came out and said that the U.S. Q1 GDP growth likely to be revised down to -2%. It also expects the ECB to remain on hold during the next meeting. And then U.S. GDP annualized Q-on-Q came out at -2.9%. That's a doorbuster. The expectation was -1.8%. However, we must note that this is a tertiary reading and is considered historical and is unusual according to what reports I read about it. U.S. durable goods orders -1 versus 0%. So all in all, pretty poor outcomes on the numbers that came out at 7:30. Looking ahead, we have ECB's Weideman speaking currently. At 9:30, we have crude oil, a -1.4 million expected, distillates 700K, gasoline 1.5 million. And then at 10:50 Central, we have a 2-year FRN auction for 13 billion, and then at noon we have a new 5-year note auction for 35 billion. Let's move on to the chart real quick. Now, those of you who attended yesterday's Trader Bite or watched it on YouTube, those are recorded and archived on youtube.com/FuturesTrader71. We talked about the weak triple top here at 55.50, the expectation that it's likely to get tested and broken, and we're looking at 56 as the over-under line with 2 days of balance, pretty tight balance on about 1.7 million contracts during the day session. So the expectation was for, if it broke through, was for a strong break to chop and then to fall back in. We did not. I had talked about the expectation that we don't see this. I'm not seeing this as it breaks and it gets a sustainable move up. And that's pretty much what it did. It pushed to 1960. The last high was 1959.75 on the Globex session, and then it fell back through, and then This is when the Syrian news came out. It's about noon Chicago, and it pushed right back into the 55.50. The expectation was for the 55.50 to provide support since it was a triple top. No such luck. It paused for a few seconds before it fell right through into the mid, into the closing price of the prior day, and through the opening swing, and boom, it falls into it. Basically executed hypo 2 in the morning, hypo 1 in the afternoon, and the expectation was for if it does fall through into the Fed LVN zone, for it to hit the other side, which is 37 and a quarter. It did not do so on the session. We've had yesterday's range was the highest since Fed Day, and it got a little bit ahead of itself. Really good volume yesterday, 1.35 million. Some decent opportunities for gain and loss in this on this trend down. Trend day profile, multiple distributions, and then what ended up happening is the overnight ended up pushing the overnight low down to our target here at 37.50, just a tick above 37 and a quarter. Currently the market's trading 39 and a quarter. So yesterday's profile leaves some artifacts behind, leaves some LVNs and multiple distributions, and it was not able to move the point of control lower. So value value doesn't really exist in a trend profile by definition. When the market's trending, it doesn't see value. But of course, it did create this high volume node and point of control in the morning, and then it came back to it in the afternoon and traded it a fair amount and kept the point of control there. So our point of control is in line with the prior day's value. So this point of control is saying that there wasn't enough activity to actually move this down, to move value lower. It's holding up there. So the expectation is for a retest of this 1950, 1952 in the next few sessions. Overall, we had a strong open. By contrast, the NQ had an open above its range, prior day's range. The NQ had much better structure yesterday. Let's switch to a 4 Renko. Had a much better structure. It opened above value, right at the top of the prior day's range, and it had an open drive into new territory. Not a product you want to sell yesterday on the open, and it pushed through to 38.28 before it moved the point of control up, and then on the point of control move up, the expectation on this type of day is that it would consolidate and then it would break higher, and ended up breaking lower. Pulled back to the mid, beautiful pullback, retested the IB high, chopped around for a bit, fell through the mid, pulls back to the mid, and then off it goes and back into the prior day's range. So the Nasdaq's actually holding the balance it's had over the last 3 days. Whereas the ES is actually relatively weaker. The ES has already pushed down lower into that Fed day. Fed day being this day here. The ES is essentially trading around 37.75 in the NQ. The NQ showing better strength. But overall, this is an open drive. This is a classic textbook open drive behavior. We want to identify that it is an open drive to avoid selling it on the open. In the ES, what we had is we had almost the opposite. We opened right at the extreme of the prior day's range at 50. 50 is an important number now. It opened at 50, and it tried to drive right off the open. You can see the delta here is showing strength on the buy side. It's trying to push on the open, and it pushed right to the point of control. You see this point of control from Monday to the tick rotates back through, and it fights the fact that the Nasdaq's pushing up. And we saw that the S&P breadth and so forth was not in on this movement until we got our number at 9 o'clock, and then the market breaks and finally tackles that 55.50 triple top, very, very weak high to push to 60, and then we had that news to bring it back in, and then continued lower as it hit that air pocket from the Fed, this LVN zone, which we marked from last week, since Friday. So that's what we did yesterday. That answers the question, what have we done? And then now we're going to address the question of what are we trying to do. The market tried to roll back up into in towards the first LVN of 47 and a quarter overnight. 47, 47 and a quarter, another key area. Again, 50 is a key area above now, and was doing an okay job. It's a weak push higher. Most of the session it spent through the Asian session, it spent fighting this lower HVN before the numbers came out and it pushed lower. The market's opening, so I'm out of time. Looks like to me the primary hypo is for it to push this overnight low, search for bids. The next level down is 33. We have a trend line at approximately 34.50, but the expectation is for it to test lower, and I expect the market to find buyers to push back up and to tackle 47 and 50 early on. I'll leave you with that because the market's opening, and I'll catch you tomorrow. Take care.